What's going on, guys? So, hey, I want to throw something out there for you because a lot of people ask me, hey, how do I get started in taking control of my financial future? And there was one really simple thing that I learned that ended up changing the game for me before I had anything, right? And it's really simple. You guys have heard it all the time. You probably heard people tell you, pay yourself first. Well, what exactly does that mean? Okay, so first of all, let's talk about pre-tax contributions, right? If you're earning a paycheck, you got a paycheck here. All right, let's see, get my drawing thing going here. Okay, you got a paycheck, right? You got your paycheck. It's got your money in it, but it's got all these deductions, right? You're paying all these taxes. You got Medicaid, Medicare, Social Security, whatever all these payroll taxes are, right? And this is a big thing right now, discussing payroll taxes. But here's the thing: you earn this money, you earn this much, and then all those deductions hit, and then here's what you actually are left with. You have a nice deduction. All these deductions are going out. Now you're taxed on this, right? You're taxed on this earning, but then you get these deductions, right? So this is your net income, right? Simple, net income, right? And the total amount you earn is your gross, which hopefully this is not new information for you, but I promise there will be some useful information here. I'm just keeping it as simple as possible. And it's gross because it's gross how much they take taxes out of it. That's why it's called gross. That's why I call it gross. But so here's the thing, right? So you have an option, right? Your deductions are applied to this. I think I said taxes. I meant your deductions are applied to your gross. The taxes are applied to your net, right? This is what you're actually taxed on. I need to get a better stylus pen, guys, but bear with me because I'm trying to teach you something. You'll learn something. Pay attention. It's valuable information, okay? Now, your employer probably offers you a 401k. And if not, you can set this up yourself. If you're self-employed, you have an employer, you're self-employed. If you're self-employed, it's called a SEP IRA, S-E-P. S-E-P. I'm losing here with this drawing, but bear with me. A SEP IRA. Your maximum contribution annually is $50K. So if you are self-employed or own a business, you can pre-tax up to $50,000, which means that you don't pay tax. And if you have a 401k, say you're employed and you got a 401k, and that capital, right? That contribution is a pre-tax contribution. I think your max is some percentage. I think comes out to maybe $18,000 a year. It's not a whole lot, but let me show you why you want to utilize it. Because if you have gross income here, you're paying all these deductions already for the government, payroll taxes and Social Security and that sort of thing. So to truly pay yourself first, you want to make this or this one of these. Means it's a deduction, right? It goes against your total gross, and yes, it reduces your net, but it also reduces your taxable income because you're able to put this much away per year or this much away per year if you're self-employed and not pay taxes on that income. This is the first way to not pay taxes on your income. You have to pre-tax that income. So that's the first thing that I would do, right? Look into what are your pre-tax options. There are other vehicles for doing this, like an HSA is one, health savings account. It's an HSA, can also be pre-taxed. And that's just, putting money away for health expenses. There's certain regulations and things you can do and can't do. I would, if you're interested in that, look it up. Look it up in detail. Right. So, but here's the point, right? You're getting paid here. You got that gross amount. All your deductions are getting hit against your gross income, and then these are all just deductions, right? And if you create a deduction for yourself, like the 401k or the SEP, that becomes pre-tax. You're not paying any taxes on that income. So if you pre-tax at 18,000, your net income goes down. Your net taxable income goes down by 18,000, right, per year. So that's 18,000 you don't have to pay tax on. So that's the first step in paying yourself first. Pay yourself first where you don't get taxed. Let's talk about the general saving strategy. Now, I haven't done my velocity banking video yet. There's two strategies that I use. One is velocity banking, and another is a concept called infinite banking. They're very similar, but one of them uses infinite banking uses a specific vehicle, whole life insurance, but this is just a concept I want to talk to you about because we haven't really got into compounding interest. But there's a great book out there that I want you guys to check out. It's called The Automatic Millionaire. So I'll just put a note there. It's an old school book. It's old, but it gives you some really important points. It gives you some really important points to pay attention to in your spending habits, in your your saving and investing strategy, right? So it's a lot of it's about increasing your spend on investments, on your investment accounts, investing in compounding interest, and not spending your money on stupid stuff. But again, because that goes back to my other video, what's the difference between how poor people, middle class, and wealthy people spend their money? Poor people buy things. So the less things you buy and the more assets you buy, it creates a snowball effect. The quicker you're going to be able to go into becoming wealthy, which is a process. So compound interest, automatic millionaire, pay yourself first, right? All right, let's see if I can try I'm going to try something here. Let's see if I can get that and that. I'm going to say, pay yourself first. Pay you first. Yeah. Well, I'm just kind of getting started here. So sorry if my drawings are not great, but hopefully the information is valuable. Guys, please comment, subscribe, like the video. If you hate it, dislike it, but give me a like, give me a comment, tell me why you like or don't like it, and then tell me what you want to know, what you want to learn, what you are aspiring to. So give me feedback. Pay yourself first. Cool. So let's look at this from another context, right? You have your gross income, you have your non-taxable income. We'll just say, here's your gross income. Here are the deductions. And here's your net income, right? And then you're going to have another deduction for your taxes, right? You may or may not have additional taxes based on that, right? Typically, if you're not self-employed, the taxes are coming out of your paycheck. If you're a W-2 employee, it comes out of your paycheck. If you're self-employed, you got to pay your own taxes. But here's a really basic concept, right? So you've got your income pool, right? I want you guys to pick a number that's comfortable for you and start to automatically transfer it to yourself every week or every month. Whatever works for you better. Pick a number and it should be a little bit higher than you're comfortable with. So if like you're saying, if you can save $50 a week or $50 a month and it wouldn't really phase you, try and do 75 or 100. If it's 500, it's 1,000. If you make a lot of money, pick a good number. I want you to automatically, this is an auto draft. Okay, every week or every month, you pick what works for you. You're going to auto draft that income into a sacred account. Okay, and your sacred account could be a savings account, it could be a financial freedom account, money market, whatever it is. But you want to auto draft it. Okay, the point of this is that it starts to take money out of the vicinity. Man, I'm sorry, my writing is just really screwing up here. Okay, auto draft. It takes the money weekly or monthly. So choose week or choose monthly and choose a nice dollar amount. And what this does is it starts to take the money out of the coffers of your old habitual spending, right? So let's say you have a checking account, but your checking account starts to go down because you're drafting that money out, but you're putting that money somewhere else, somewhere more useful, like a money market, right? You could do a savings account as long as it's a sacred account. You want that money is sacred. You don't touch it. Once it's in there, you're using it for one thing and one thing only. And what that money is, we call it your financial freedom account. So I'll call it your FFA, your financial freedom account. It can be a savings account, it can be a money market account, whatever it is. But it's a sacred account. You don't touch it. Okay? Every week or every month, that money goes in there. Boom, boom, just like that. Okay, it's really important. You want to auto draft it. And the reason that you do this, you'll see this account starts to grow. There's only one thing you can do with this account, and it's buy assets. So it's real estate, stocks, bonds, or maybe you can, you have some other investment opportunities, or you're building a business and you want to reinvest the money in the business. But either way, that money goes towards creating your financial freedom. And it takes that money out of the old way that we're taught, where we're just spending money out of a checking account for things and paying bills and, all these things that, they're low priority, but if the money's there, the money goes towards it and it just evaporates, right? So screw all that. I want you to auto draft every single month. And if you could do it weekly, great. I say if you can start with like $50 a week, I'm well over 1,000, 1,500. I don't even know where I'm at. But a month. So start with that. And then something will happen. The way that you manage your money will start to change. The way that you look at money will start to change, because in your wastage accounts, anything that's a bill or living expenses, I'll call it a wastage account, because that money is really just wasted. It's spent on necessities, but it's in terms of building your financial freedom, it's wastage. So you'll start to see this account shrink and this account grow. And now you have a separation of duties. So you're putting that money to work. So again, guys, pay yourself first. And this is just a great way to start. Again, subscribe if you like the video, like it, give me a comment, tell me what else you guys would like to learn more about. Thanks for watching.